On October 5th, Bitcoin traded up to new all-time highs of $127,000. At the time, it was up 33% for the year and an astonishing 600% since the start of 2023. Now, analysts point to several possible drivers. Some believe Bitcoin and gold are acting as hedges against what markets see as reckless U.S. fiscal spending. Others suggest the coin still moves in step with risk assets, especially the Nasdaq. But there are others who argue that the real story is adoption, both institutional and retail. El Salvador, BlackRock, and Fidelity have all deepened their presence in the space, along with several major U.S. banks. Now, on the retail front, smaller size contracts are drawing in newer investors. On October 13th, CME Group launched options on Solana and XRP, expanding its suite that already includes Bitcoin and Ether futures and options, plus existing futures for both Solana and XRP. The idea is simple. The broader the adoption, the deeper the roots, and the more resilient the cryptocurrency market becomes. October is shaping up to be a pivotal one as traders await the SEC's decision on ETF proposals tied to Solana and XRP and even some Tier 2 names like Dogecoin and Litecoin. Still, the past week hasn't been kind to Bitcoin. It's down roughly 12% from those early October highs. Now that may reflect broad de-risking alongside the Nasdaq amid China trade talks, or simple nerves ahead of the SEC's ruling. What is certain is that Bitcoin's volatility remains alive and well, and that there's little sign that it will change anytime soon. Now, if a trader believes that Bitcoin could rally from here, they could express that by buying the micro October Bitcoin contract at 111,700 and target a move back to near the all-time highs of 126,000. A stop for this trade could be placed below at 103,000. This trade can make $1,430 if the target is reached and risks $870 if you're stopped at your level. Now, if a trader believes that Bitcoin will continue lower from here, they could sell the October micro Bitcoin contract at 111,700 and target a move to the mid-June lows of 99,000. Now, a stop for this trade could be placed above at 118,000. Now, this trade could make $1,270 if the target is reached and risk $630 if you're stopped out of your level.